Hey guys, just wanted to make a quick video here. I've been testing something recently and it's actually been really helpful and I wanted to share it with you. So this thing has helped me time two really good trades this week, and I actually took a loss on one setup where I completely ignored this because it's still something I'm forward testing, so I'm not like 100% like locking it into my trade plan, but I wanted to get your thoughts and see if anyone's doing anything similar, and really just see if I should really incorporate this more into my trade plan. This is kind of a unscripted video here. I'm not going to really edit this, but I just wanted to break it down, a couple examples. So on ES was the first one from yesterday, and I've just got it queued up to where we were on the higher time frame, 4 hour. We can see that New York session had this inside wick reversal. So this is something that I'm talking about in a different video next week. But basically we have this wick consolidation, these two candles here inside this wick, and then the 6 a.m. candle reverses off the high, closes and engulfs this. So by this point, I'm looking for shorts. I don't think this is showing the candle. No, this hasn't shown the closure yet of this 4 hour candle. So just kind of backing up here. This is what it looked like where once I saw this closure on the 4 hour, I was looking for shorts. So we had this candle on the 1 hour, and then the next candle moved lower to the low of day. And still there's so much bearish momentum here, and we can see these strong bearish candles. So what I did was I went to the volume, and again, this is incorporating volume and volume profile, which I know might sound pretty dry, pretty boring or complicated. The way I'm using it, I've never really seen people use it before. Not to say that they don't, but I just haven't seen it. And I promise you it's very simple, and I think very logical. So just bear with me if it's something that you might be turned off by. But basically, I'm looking at where the highest volume candle is here in this case. So we have these two large down candles, and this candle right here is very high sell volume. So if I mark the volume profile of just this candle here, you can see this yellow line represents the point of control. So I only have the point of control enabled, and here are the other settings if you want to take a look. But basically, because the point of control is up here, and because this is a large volume candle, if the point of control were down here, I would approach this differently. So this is where the bulk of the transactions are of this candle. That's my understanding of this, is that we have this down candle with lots of selling volume, and we presume it to be selling volume because it closed, near the lows and was a big, scary red candle. So if this yellow line, this point of control, was down here and we started to see some bullish price action and impulsiveness on the lower time frames, I would assume that sellers are possibly trapped down here, and I could see a long back up. But in this case, we have the highest kind of volume at the price level that's at 63.14, which is up here. So all I really did here was I marked this out on my chart, and I thought, okay, if we're going to continue lower, maybe we could see a pullback to here. And then I also had my target for the trade, which I'll show you in a second. The target I had is the closing price of the week, because I know that's going to be a sensitive level. We've already hit this low of day level. So the theory would be we retrace and then see a move lower. So that was what I was looking for. So if I just drop down to the lower time frame now, I'm not looking at this as as a raid to go higher, just because I'm now bearish based on the higher time frame. Price works its way up, and then we tap in and we reject right away. There's a tiny little, I don't know if that's an inversion. I didn't use this. This was this sort of sizable imbalance that I had, that I was looking at, and I was waiting for a closure below, which we got right here, right there. And then the setup, the entry was just a pullback to there. And then I really don't want to see it above, there's no reason for me to see this coming back up here. And then, so this was a decent risk to reward trade that I thought made sense. This is kind of the next level. All I did was just set my limit there, and then I got triggered into the trade and then to target. So that was really nice. I was like, whoa, that was pretty nice. This isn't the first trade I've taken with volume profile as a kind of a confluence, but the precision of it, the more I've been using it, the more I've been impressed by it. And so I thought that was a really cool trade. And then I'm going to show you another example here today on NASDAQ. So I'm going to show you the winner first, and then I'm going to show you the loser after. So the winner, very simply put, this was the session low. Let's make it white. Let's use white for my support. This was our session low from Monday. So we've had a kind of a bullish week, even though we've rated this high, structurally still bullish. So we came down here, wicked the New York session low from Monday. So I was looking at this level for raids. And then if I just kind of go to the replay here to show you what I was looking at. Okay, so the market is collapsing down. Originally was, well, let me just show you the setup. So first of all, market comes down to hit this low. So this is my support level, which I had on my chart at the beginning of the day. And now I can see that this is coming down with some momentum here. And we have this down candle that led to the low is sort of our highest volume down candle in the neighborhood of where price is. We have one here, which I'm also going to illustrate because it's kind of far away. So there's enough range here, enough distance, I should say. You can see how there it is here on the recent down candle. Let's make this dashed. So again, sellers who are selling this move, maybe people are chasing this move. There's a lot of sellers. I'm not looking this to join in a sell in this case. I'm looking for it to flip because this is my support level. And I'm looking for it to flip because if sellers are here and now we're above it and I get the inversion, which hasn't happened yet, if I get that fair value gap to flip, that's how I'm using it as a confluence, if that makes sense. So now the next candle, we get a nice closure above. Even though there's this imbalance here, this is kind of why I've started to kind of appreciate this, because in the past, maybe I'd be hesitating because I'd be like, oh, we have imbalances here. Maybe it's going to just reach a little bit higher and then go lower. But because I have the key level, because I have this confluence of since this is a higher volume candle than this, to me, this was worth the risk. And it was like a 30-point stop. And then where am I targeting? Well, this is the next. We're still kind of bearish at this point until proven otherwise. So the safe exit for this trade for me was to literally just use this as a target. I think it was about 60 points. And then you could see just how beautiful this was, right to target. And then I got out, and then the market obviously ripped higher. So I left a lot of money on the table here, but still, this was just the low-hanging fruit trade for me. Those were the two wins. And then the loss, again, further supports that maybe this should be something to continue testing and to incorporate into my trading, which is a little bit earlier. So we had this session. This was the low of day level at this point in time. So London low of day level. In general, I'm skewing bullish on the indices because, I mean, obviously it just seems like it's just been easier in general to long than to short. And what's worth mentioning here is I did not use this to support. I didn't have the confluence here. So yes, we did have a little bit of a high volume candle here, but look where the inversion was. So I guess if I had gotten down here, but I kind of need this inversion to flip. Because look, this is a high volume candle at the low. And so yeah, we get above it, but then we lose it again. Again, there's no inversion yet. This is one of the reasons why I like this. I feel like I still need a price action confirmation. I can't just go straight off the volume. But anyway, the point is that I got into the trade right here once we closed above it right here, because I thought, okay, this is an inside wick. I'm seeing it reverse off my level. We have imbalances here to fill. But what I didn't take into account was this huge down candle. Obviously, this is also the opening range is here. So we are bearish on the session, which is a consideration, but we've taken out all of these lows. We've hit the low of day level. I thought, okay, this is not a bad trade to target, maybe to fill here, if not even take this high altogether. But look, we have this down candle. This is very clearly very bearish candle, high volume candle. I believe the highest volume candle of the day. And I'm just at this point of the day. And I basically ignored or didn't see this until too late. The fact that, look, sellers sold this, right? Until buyers can flip this and flip an imbalance, sellers, those same sellers could be defending those shorts and selling again at this point of control. And look what happened. I got a little bit of an upward move on my trade. And then look how it just tinked down. And of course, yes, I got that lower one entry here, which was a winner, but this was such an unnecessary loss. Now you could look at other things like, oh yeah, maybe, this wasn't the most impulsive move off the low. And I'll grant you that. It's not really like a strong, one of my friends pointed out to me, well, it wasn't really a V reversal. It didn't really have that great momentum. And this is a very, just based on the candlestick formation, this is a very nice kind of supply area, if you will, where it's likely to give a reaction to. And that's fair, but we did react to it here and then pushed forward. So, all in all, the confluences that I had still pointed to this being a decent trade, but I didn't have this. And so that I just think is very interesting. And these aren't the only 3 examples I've had. I've been testing it more than this, but I just wanted to highlight these because these were fairly recent ones. Just check out this. I just want to show you this. So this was our raid that I showed you earlier from Monday's low or New York session low. This was that reaction that I traded on the lower time frame. But look on the 15-minute now. This is our highest volume candle of the whole week. And it's in this kind of liquidity raid low of day area, okay, off of a key support. So this is a big down move. I think there was news about Powell at this time. Just look at this. This is the point of control. This is where the bulk of the selling volume on this high volume candle took place. Look at that. We get above it because now we're bullish. This is an order transfer. Sellers are selling into buyers, stronger buyers who are buying this up, who are pushing this higher. Sellers down here are trapped once this candle gets above here. Look at this. Everything below this level is trap volume, okay? We know it's volume. We're not just guessing. We're seeing it there. So this is a way of visually seeing that volume, seeing that trap. And then look what happens when the price taps down into it. It's a perfect rejection here. Now, the thing that's tricky about this is that depending on the time frame you use, you might get different levels. So here on the 5-minute, that same area, that same move down, this is the high volume candle. So this was the one on the 15-minute. 15, point of control. This is the one on the 5-minute. So sometimes they might be at odds with each other, but look, sometimes you get that confluence where they stack. We're above the higher time frame one. Now we're above the lower time frame one. And look at the respect that we're getting. Look at the respect that we're getting here off these levels. So this can't be, I mean, this just looks, there's something to this, I think. So anyway, would love to hear your thoughts if you're doing something similar or using volume profile. In what ways are you using it? Please let me know. Would love to hear it.